The Sidra project has been generating serious buzz across the blockchain and Islamic fintech world, and for good reason. It's not just another crypto project chasing hype or short-term speculation. Sidra is building a complete digital ecosystem rooted in real-world financial use cases, compliance, and inclusion. With its utilities spanning token transactions, staking rewards, validation incentives, and integration with a digital bank service known as Sidra Bank, the project positions itself as one of the most promising players in the emerging Islamic digital economy. Let's dive deep into how these utilities could make the Sidra token's price skyrocket once adoption accelerates. At its core, Sidra blockchain aims to solve a huge gap in today's crypto space: the lack of Sharia-compliant blockchain infrastructure for global Muslim communities and Islamic financial institutions. While traditional cryptocurrencies often conflict with Islamic finance principles due to elements like interest, uncertainty, and speculation, Sidra is designed to be fully compliant. This focus gives it an immediate niche advantage, a market of over 1.9 billion Muslims and trillions of dollars in Islamic finance assets that can now integrate safely into blockchain. 1. Token transactions, the heart of Sidra's utility. Every great blockchain is powered by its native token, and for Sidra, it's no different. The Sidra token is the fuel that enables every transaction, contract, and decentralized application within its ecosystem. Users will need Sidra tokens to pay network fees, send value, and interact with dApps. This creates continuous demand. As more users join, more tokens are needed to keep the system running. Imagine thousands of MSMEs, micro, small, and medium enterprises across Islamic markets using Sidra for daily operations, payments, smart contracts, and cross-border trade. That transactional utility alone could absorb a massive portion of the circulating supply, reducing availability on exchanges and driving prices upward. 2. Staking and validation rewards. The passive income engine, Sidra's blockchain is expected to use a proof-of-stake POS or delegated proof-of-stake DPoS consensus model. That means token holders can stake their Sidra to help secure the network, validate transactions, and earn rewards. This creates two major economic effects. Lock supply. When users stake tokens, they are temporarily removed from circulation. This reduces selling pressure on the open market. Passive yield. Stakers receive rewards, encouraging long-term holding rather than short-term trading. This dual effect can tighten token liquidity while increasing investor confidence, a recipe for sustainable price growth. The more staking participation grows, the more stable and valuable the ecosystem becomes. 3. Sidra Bank, a Sharia-compliant digital banking revolution. Perhaps the most exciting part of the Sidra vision is the proposed Sidra Bank, a digital financial platform built on the blockchain, offering savings, payments, and investment tools that adhere strictly to Islamic principles. If this becomes reality, it could disrupt the global Islamic banking sector. Through Sidra Bank, users could store digital assets, earn halal staking rewards, access liquidity pools, and make global payments, all under transparent blockchain rules. This would turn Sidra into a real-world financial bridge, not just a crypto project. As adoption of Sidra Bank grows, the need for Sidra tokens will surge because they'll likely serve as the key asset used for transactions, payments, and rewards. If millions of users hold Sidra for daily banking and payment purposes, the demand curve goes vertical, pushing prices to new highs. Number 4. Payment ecosystem, fuel for global adoption. Sidra also envisions creating a payment ecosystem where merchants, businesses, and consumers can seamlessly transact using Sidra tokens. This could extend from local MSMEs in Islamic economies to international remittance corridors between countries like Indonesia, Malaysia, Saudi Arabia, and Nigeria. By building a frictionless, borderless payment solution that replaces traditional banking intermediaries, Sidra could drastically reduce transaction costs and settlement times. For end users, this means faster, cheaper, and Sharia-compliant financial services. And for the token, it means constant daily utility. Once Sidra achieves mainstream payment adoption, every transaction, from buying coffee to settling invoices, will require Sidra tokens. This natural demand, combined with limited supply, can cause a powerful supply shock that sends the price upward dramatically. Number 5. Network effects and investor confidence. Every successful crypto project benefits from network effects. The more people use it, the more valuable it becomes. Sidra's focus on compliance and inclusion gives it a strong foundation for institutional partnerships, especially in Islamic finance hubs like Dubai, Kuala Lumpur, and Istanbul. As regulators and financial bodies recognize Sidra's framework, confidence and credibility will grow. Institutional participation from Islamic banks, fintech startups, and MSMEs could introduce massive liquidity inflows. 6. Scarcity and future potential. If Sidra's tokenomics are structured with a fixed or deflationary supply, the combination of staking transactions and ecosystem expansion will naturally amplify scarcity. The more active the network becomes, the fewer tokens remain available for new investors. Over time, that scarcity, combined with real-world demand, can cause exponential price growth. Final thoughts. Sidra is more than a crypto project. It's a financial movement merging blockchain innovation with ethical, Sharia-compliant finance.